So typically what we're going to see in the restaurant or hospitality space is around the mark of anywhere between 15 to maybe 25 stores or units is where typically the constraints of the outsourced model make it evident that they want to bring that function internal or in-house. What that means is that maybe there are efficiency issues with the outsourced provider that they cannot scale with the client at that outsourced firm in the ways that the client needs, or the fees are going up immeasurably, and the costs of those outsourced providers and the outsourced software, whatever they are using, are actually maybe going to exceed what that in-sourced talent would cost. So, and also there's efficiency issues. There's maybe accuracy or better control issues over the types of financial data that they're trying to report on. And there's also protection or privacy issues that sometimes happen with an external provider or an external firm that cause that kind of shift of mindset into that internal model. So I would say essentially, around the 15 to 25 mark is where we start to see that pretty standard, that shift of mindset. However, for certain full service or really complex or, larger restaurant groups that maybe have high revenue in a lesser unit model, maybe under 10 units, but they're over 5 million in revenue per location, they might also sometimes necessitate an in-sourced accounting and finance staff at a much earlier clip than maybe some of the franchises, QSRs, or smaller restaurant groups. So this can be multifaceted and not always in this exact order, but typically when restaurant groups are transitioning from that outsourced model to an in-sourced model, what they're first going to do is kind of have a, executive level or leadership strategic planning and assessment period where they're really defining what their current processes are, what their current internal staff looks like. Maybe there are people that are doing functions within their corporate office that could or want to transition into more accounting or finance related role. We're also going to recommend that they assess all of their technologies in place and any gaps in processes that are existent with that outsourced provider that they maybe want to try and find any new technology to absolve or develop new processes around when they bring that function internal. Step 2, you're going to, this is part and parcel of that initial step, but do a very, very deep dive, comprehensive analysis into the technology, either that's being used internally in your corporate office or that external party has been using. So, for example, if the external party is using QuickBooks Online, and maybe you're using Craftable or Cogswell or Margin Edge as an operational tool, and those things didn't tie together, or that outsourced provider is not using an AP automation tool, or the accounting system that they're on does not automate due to do-froms in a multi-entity environment. Those are all going to be things that you really want to highly document as that current status of what you like, what you don't like, kind of keep kill type scenario, so that you can start to build out maybe a future tech stack with your team, as well as kind of a future role-based or task-based outline of what those new roles internal will be responsible for when you bring those functions in-house. Let's see, step 3. Building the team. So this is obviously hiring those people. Figuring out what roles you actually need is super critical too. What we see a lot of just at the start, and this is obviously contingent on the size of the business, but typically we recommend some kind of controller in that accounting function that is responsible at the top level for the accounting output, closing of the books, the financials, and works with any kind of CFO or financial reporting person internal. And typically what we'll also see at, kind of very core is some sort of like staff accountant, maybe a senior accountant or bookkeeper, and maybe also kind of an AP person. And maybe that AP person also handles some sort of payroll responsibilities. But obviously, depending on your budget, what you can afford, and all the fixed costs associated with hiring those people and benefits and salaries and all of that, you have to kind of figure out what that right mix looks like. In accordance with optimizing your technology at the same time. So what you can do, let's say on a very, very custom, highly developed, well thought out, implemented instance of like a Sage Intact accounting system with a really well implemented backend like Craftable or Cogswell. Those two things tied together and integrated really seamlessly to share the right statistical data and pull reports. You could maybe get away with a smaller internal staff and maybe one controller, one staff accountant, one AP clerk, than maybe you could if you had systems that were really cumbersome and clunky and didn't talk to one another. So at the same time as you're kind of figuring out the right, the right roles, the right seats, the right, salaries and the right budgets, you also want to make sure you're optimizing that tech stack so that you keep that head count down. Next step would be obviously selecting and implementing, new software. Accounting, back office, AP, automation. There's so much that is available right now out in the market and that integrates, if not seamlessly, integrates well enough to where it can create incredible efficiencies within your internal organization. So you want to make sure you get that right. You vet the software, you implement it with masterful implementation partners like Tablespoon, so that you can, again, control the costs and drive down that headcount that you end up, hiring internal. I would say lastly, the change management or the training. You want to make sure that you're onboarding these people within a timely fashion. You're training them on all your systems. You're giving them some kind of say in that selection and vetting process, perhaps, and that you're making sure that they understand that their personal goals as part of their role is tied to the success of and the user adoption of any new technology that you're rolling out. And then, lastly, setting up KPIs, performance measurement, post-implementation review and optimization ongoing. You should constantly be making sure that that staff that you bring internal is, staying up to speed with the technologies that you've adopted and that they're continuing to work and function as originally intended, and that they are maximizing the usage of that so that you can continue to keep headcount down and be as scalable and profitable and EBITDA positive as possible. I think that, I kind of touched on this earlier, but I think that you want to make sure that before you start adding headcount as a default, because that's all is just more work, more stores, more people, that you are first analyzing your existing processes and tech stack to make sure that you have optimized that as well as possible. And, I always kind of use this as an example, but there's so many really cool AP automation tools out there right now for restaurant groups that are truly AI now based, AI learning. And what we used to see 10, 15 years ago with hundreds and hundreds of vendor invoices manually being keyed in, now you're just feeding some of those into an AI learning machine, and they're picking that up and they're automatically coding those invoices, or the majority of those invoices that were previously manually entered in. So what once used to require maybe a 5-person AP team should now really be 1, maximum 2 people for even hundreds of stores. So, I always tell operators, before you just start adding headcount because you're adding 5 stores that next year, really get super self-critical about the tech stack and the processes that you've, kind of considered to be status quo, and make sure that those are optimized first so that you're, investing in technology before you're just adding superfluous headcount. Another pitfall is, I always say the right butts in the right seats. So before you're hiring internally, make sure that you're not going too top heavy. With a really good implementation of like an ERP or an RMS, a back office, COGS inventory system, you really shouldn't always need to hire like an accounting manager, a controller, accounting senior. You can probably mix up those hiring needs to be maybe one controller and maybe a staff accountant or a bookkeeper, or maybe there's a general manager or there's an office manager that is really wanting to level up. And that would be a great AP clerk that can handle some of the AP tasks that really don't require an accounting or CPA degree, or CPA license, I should say. So I always just say, make sure that once you've optimized the tech and really understood the processes and what is needed internally, that you're hiring that right mix of kind of senior and staff level talent. Because, nowadays in the market, accountants are hard to find, they're hard to pay, they're expensive, and they're hard to keep. So, find a good one, you want to keep them obviously, but, you're going to have to pay a good amount for that. So you want to make sure that if you're hiring that senior level talent, you are optimizing and scaling them as best possible. So again, it doesn't hurt, your overall profitability and doesn't suck away your fixed costs on that headcount. Let's see, another pitfall to avoid. I would say when transitioning or vetting software, there's a lot of good technology out there, especially, for restaurants. There's a lot of good stuff. But you have to make sure that you have a good implementation plan and expectations for that rollout. And that can be an external partner that specifies, like Tablespoon does in restaurant-specific, ERP implementations and setup. That can be, hiring or making sure internally that you have an IT manager, an operations manager that is in charge of that back office or RMS systems implementation, and you have a clear, clear expectations of when and how that's going to be set up. Because I've seen a lot of people invest a lot of money in terrific technology, and a year later it still doesn't work for them because they never invested the time and money in setting it up right. So implementation is key for maximal user adoption, success, and getting the true ROI out of any technology investment.